Hey guys, it's July 25th, and I wanted to do a video on scalping. Okay, so when we're scalping, we're breaking down the bigger pattern and the bigger direction into a different view for an entry. That's all we're really doing. Okay, so we have to know the bigger pattern and the bigger direction so we know that we're scalping in the right direction. Now, I know a lot of people don't really care about the bigger direction, and they're just trying to scalp a few points here and there. For a long-term trading plan, it's a pretty rough approach because some days you'll do really well, and most of the time you won't. And we've been there, we've done it. It's too hard looking at just the small time frame. Okay, because what's happening on this range chart, okay, you're not really seeing a whole lot. You're just seeing from 8 o'clock to 10 o'clock, let's say if the bars were right here. There's not a whole lot of history to go off of. Okay, so we always want to use the 3 and the 10 minute as our guide for the direction, meaning they both have to say the same thing. The 3 and the 10 both have to be green in order to take a scalp long. If the 3 minute is green and the 10 minute is red, there's confusion, and we don't want to trade the confusion. We want to trade the actual moves that have conviction behind them. Okay, now this is assuming you have the kill zone indicator to see the colors on the 3 and the 10. But in this example, we'll look at just the 10-minute chart. Okay, so down here we have blue bars. Okay, first our bigger 5-day outlook has been up, okay, at this time. Okay, so we'll talk about picking the bottom, but basically what we want to do is these blue bars and the indicator is low. That's telling us that this contraction is going to turn into an expansion. Okay, it gives us that visual heads up. We can still see that the bars are green, the blue is being painted over it as just a visual. Okay, so if the 10 minute is green and it's about to make a move, we only want to trade the scalper chart long. Okay, and all the patterns still apply no matter what time frame it is. Okay, we're looking for a move, a corrective off that move, a corrective pattern to be complete, and then we want to resume in the direction of the move before the correction. Okay, so we have a move up, we correct down, and then we move up. We're trying to catch it here for the beginning of this move. Okay, and on the scalper, there's going to be multiple opportunities to get in, but we just have to know the higher if let's say we enter here, our opportunity is way less than entering down here because we're getting extended in the move. So we have to know where the bigger targets are so we're not going long on the scalper at a bigger resistance or at the bigger upper target where patterns complete. Okay, so we're wanting to get in here where we can have some room to run to make the profits. Okay, so after correction pattern complete, you can go along the next set of green, the next green bar, which is here. Or you can wait for this structure high to be made, minor pullback, and play the breakout. Okay, know that breakouts most of the time are retested, especially if we're in the contraction zone on the bigger time frame, which is here. Since we're in a contraction, it needs to test and retest. Okay, so there's this entry and there's another entry here. So the range chart is a good chart for scalping because, or the scalping entry, because it gives you the real true range of what's going on right now. If you're looking at minute charts, for scalping it's very hard because the wicks on the minute charts, right? A lot can happen in a 3-minute candle. It can go up, down, and make that wick. Okay, and so when you're scalping, you have to go scalp above that wick, and a lot of times that leaves your stop big. And so the range chart is a good way to break that down. So the key is having the bigger time frame confirm the direction, because a lot of times people are having a very fast indicator on their very fast chart, and that's going to pick up every little move And if you're not aware of the pattern that's going on, you're going to try to play a break right here, and then it comes down, you're going to wonder why. It needs to complete this pattern. Okay, the pattern is really king over everything else. Everything else happens inside of the pattern. So without knowing the bigger pattern, you're going to be confused and you're going to try to trade counter trend. Meaning, you're going to see the price go from here to here, and you're going to think to yourself, it has to come back down, I'll scalp it down. Yes, it probably might come down, but it's going to be very choppy because it's in a corrective pattern. Corrections are choppy. So if you're trying to trade the correction, your profit potential is very limited because you're not going to short up here at this high, and so you're going to get short down in here, and then you're going to have these minor spike up, and then it's going to come down to complete. Okay, and so this is where you might short, it comes up, you get stopped, you short again, you get stopped, and then it finally comes down a little bit, and you think, oh, I should have held that, I'm going to short it again. And really the pattern is still bullish, and you're breaking down the correction into too much of a, you're putting too much focus on the correction, not the overall move. Okay, so looking at the 10-minute, you can see all the bars are green. We know, so we're confirming the small time frame with the big time frame. That's step one. Then we break down the small time frame into a way that we can repeat getting into the trade. And this is a good example of, trading the NQs over something else. From this trade, let's say 1805, it goes up to 1824 or 1825. So there's like 20 points of opportunity. I'm not saying you're going to catch all 20 points, but there's a lot more opportunity to get more points than trading something like the ES, because the NQs actually break, right? It looks like more like an Apple chart or a Google chart. When it goes, it really goes. And if our whole goal in scalping is to get in hoping it goes quickly, we want to trade the symbols that do that instead of trading the ES over and over out of frustration, hoping it goes. The hoping factor doesn't really work. And the ES is very choppy. So I just wanted to show breaking it down, and then here's another correction pattern. Same thing, pulls back, there's another opportunity to get in because the 10-minute is still going up. If we would not be stopped on the 10-minute long, we could still go long. But think of it this way, if we're not stopped on the 10-minute long, why would we go short anything else? Right? We always want to think of it a little bit differently. That makes a little bit more sense. So try looking at this chart. Even if you don't trade the NQs, it's a good symbol to trade. You will get filled. It's not as thin as people say that it is. No matter what, you're always going to give up that tick doing a market order anyway. So, and also you can trade more contracts, being able to scale out of the trade. Okay, don't look at the point value, look at the point opportunity, because it's cheap buying more contracts. If it was $50 a contract, I would maybe not be saying this, but it's so cheap that it doesn't really matter, right? You get one tick, your commission's paid for. So look at it in a different way. Trade what moves according to the style you're trading. So I'll leave the video here. If you guys have questions, email us at trade@eMiniSchool.com.